Well, hi everyone, it's Tom Grafeo with Dove Investments. It's Friday, August 25th. I'm going to try and make some quick comments here because today's kind of a big day, and I want to take you through a couple things that will hopefully set us up for the rest of the year and going into the rest of the year. Today marks an important day because exactly a year ago, right about a year ago, Fed Chairman Powell was at a symposium called the Jackson Hole Symposium. It's held by the Fed. They bring in people from around the world, Christine Lagarde from Europe and the Japanese prime ministers and all the money bank prime ministers. They all meet in Jackson Hole. And they talk about policy that they're going to implement for the rest of the year. Well, last year, I'm going to be a little tech today, but last year when Chairman Powell spoke, he talked about, look, we're raising rates for 6 months. We're going to continue to do it. We're going to be very, aggressive in doing it. It's called hawkish. The tone was very hawkish. He's going to be a hawk, predatory. So when he came out of that was much more aggressive after all the interest rate rises that had happened last year. That was much more aggressive than we had anticipated, and the markets took it really difficultly. And this chart will show you, this is the S&P 500, and this is the S&P 500, and you can see the arrow indicates where he spoke last year and the subsequent 20% decline in the stock market thereafter from his what we would call hawkish comments of last year. So this year, he just spoke a couple hours ago. I've been digesting it and thinking about it and thinking about what I want to comment on it. His comments from last year really made us turn to what we have been showing everyone as being kind of like, remember this, right? Watch for hazards and use your fog lights and take longer to get to your destinations and being kind of cautious about things. And we've been having that message now for more than 6 months. And we just talked about it a little bit more. Well, let me just say that today's comments, while he certainly did not take a victory lap, he did say that things were working, that they're happy with the progress that they're making towards reducing inflation. They're not at their target. The target is still 2% inflation, but they're not there yet. But they see signs that things are working, and they need more time. There may still be a couple of raises in interest rates. There may still be some interest rate rises ahead. But he certainly was clear that it wasn't the same tone as it was last year, which is like, we got to crush inflation and therefore we're willing to crush the economy. I didn't see that. The other thing is that I've been having a lot of questions about is certainly the idea that there's going to be an election next year. Does that have a big part of it? Yes. He did mention that there's a lot of money coming into the system. That's from the fiscal policies, that's from the federal government. Fiscal policy, which includes the CHIPS Act, the Inflation Reduction Act, and the Infrastructure Act, is all pouring money into the system. That makes it a headwind for him, and he acknowledged that mildly because he's a political entity as well. But it's his job to kind of absorb that and deal with that, and he's doing that. So the bottom line is that we've had a lot of great meetings with you. We are looking forward to any time having a conversation with you. I'm here to reflect things that are important to you and your situation. But generally, my tone is going to get a little bit more positive here going forward. Yes, we've had a lot of interest rate rises, or maybe one or two more. It shouldn't kill the markets at this point. Listen, let me be very clear. These are all predictive statements. These are all forward-looking statements, and anything can happen, and there could be something completely unrelated to the Fed or something extraneous that can change the markets downward or can be a risk downward. But I don't see that at this point, and that's not what I'm preparing for. The Fed has been the most major concern towards recession, and if there is a recession, this is it. We've been talking about recession. There's certainly recession in certain areas, but as far as recession goes, we're kind of living in it now, because if interest rates start going down again, things will be more buoyant and more upward. So nonetheless, I'm here to talk to you and pray for you, be with you, share with you, spend time with you, whatever you need to help get through this time. We look forward to spending more time with you. We're always available. We wish you a great autumn as we head into Labor Day here next week, and we just pray for you. We love you, appreciate you, and we just wish that God continues to bless you all with health and family. Talk to you soon.